Hi, my name is Deborah Honig, and I'm the founder of Adelaide Capital, an investor relations firm specializing in small cap Canadian listed companies. I used to be a salesperson on a sales and trading desk for 10 years, specializing also in small cap equities. And I left and founded Adelaide 3 years ago. And so I go out and try and find the best small cap ideas that I can. And I'm very excited about the gold space right now because I think that we're in the start of a very good bull market for gold companies. And I particularly like junior and mid-tier companies because I think that they're undervalued versus their larger peers. So today I'm interviewing Scott Trebilcock, CEO of Core Mining. Core Mining has a portfolio of advanced high quality gold projects in North America, and Scott's going to talk to us about his company, which just released a preliminary economic assessment. And a lot of you may not know what that is. It's commonly called a PEA. So I figure, why not get Scott on the show to talk about what a PEA is? Scott, thanks for joining us today.
Thank you, Deborah.
Can you explain what a PEA is and why it's significant?
It's a great question. People throw around acronyms, and I'm sure investors get it all the time. People rhyme things off, and you're like, "Oh, what does that really mean?" So, my view, a preliminary economic assessment. Number one, you'll hear it a lot because it's very important, in my belief, for a resource company, particularly a small company. A preliminary economic assessment, if you break apart the words, is actually, to restate it, is very much like the words in the acronym actually say. But a company will typically make a discovery of some kind of metal in the ground. They'll spend a lot of capital drilling that deposit, and you'll see a lot of companies that are putting out drill holes and saying, oh, look, there's this many meters of that and this many meters of this. After a certain amount of work, when they have enough drilling, they're able to declare a resource. And a resource still doesn't necessarily mean you've got a project that has a chance of becoming a mine. So the preliminary economic assessment is the first time a company hires engineers to take a resource, to actually put cost to what it would take, both capital and operating cost, to put that metal in the ground into production. And typically from that, you're able to look what the cash flows look like, look what kind of metal production there is, look what kind of capital costs required, and also very importantly, identify the risks and opportunities, grow the resource, or perhaps there's some other, positive and negative things to find in the project. And it gives people a lot of comfort, both internally to make decisions on how to go forward, and from an external perspective, how to value metal in the ground. We started with, for example, a 2.2 million ounce oxide gold resource. We put out a resource in December of 2019 on that showing how much metal we have in the ground. We brought in a guy named Mark Leduc as our chief operating officer. He put together a team of engineers who went and developed several different mine plans, did trade-off studies around different configurations for how to put this mine together. And we came up with a mine design that delivered 1.2 million ounces of gold, developed a project net present value for the future cash flows of $343 million. That's at a 5% discount rate and $1,400.50 forecast gold. And that gives us confidence because that generates a 44% IRR, which is the internal rate of return for the capital we've spent, which is an incredible return. So it just screams we should move this project forward to the next step, which in our case is moving right into permitting, because that's the longest time item there is going forward in the project. Technically, we don't have much to do. Got to get through the permitting process and build a mine because it's such a great project.